Yesterday, while you were asleep, cryptocurrency traders across the world were awake. But it wasn't market volatility that kept them glued to their screens. It was a law that had just been passed by the US Senate. The law is called the Genius Act. Genius, which stands for Guiding and Establishing National Innovation for US. Stablecoins Act establishes a regulatory framework for stablecoins. Murmurs in American power corridors are that the crypto lobby pumped millions into the 2024 elections, campaigning for Republicans, and Trump has just returned the favor. But this isn't only about crypto lobbying. It's also about power. By regulating USD-backed stablecoins, America is making sure that the digital future still runs on dollars. While China pushes its digital yuan and BRICS explores alternatives, the US wants to ensure that the dollar remains the default currency even online. In simpler words, the US had just made one type of crypto, stablecoins, legally usable, and people will be able to use these digital money just like you and I do online payments and transfers for every transactions. But what are stablecoins and how similar it is to other cryptocurrencies like Bitcoin and Ethereum? Think of stablecoin as the calm, reliable cousins of cryptocurrencies like Bitcoin. But unlike Bitcoin, their value doesn't swing wildly day in and day out. They're designed to stay steady because issuers must redeem them at a fixed value, typically pegged to the US dollar. But why should you be bothered about what's happening in the US? Well, the implications of America's Genius Act extend far beyond US borders. When the world's largest economy creates a comprehensive regulatory framework for digital assets, it sets global standards. Countries that want their financial institutions to interact with American markets will need to align their regulations accordingly. So in short, this is going to affect you sooner or later in some way or the other. Currently, Indians can buy and trade cryptocurrencies as digital assets, but they cannot use them for actual commerce as tokens. In India, crypto profits are taxed at a flat 30% with no deductions, not even for your losses. And just to keep the pain consistent, there is a 1% TDS on every crypto transaction. It's less of a tax policy and more of a warning label. Trade at your own financial risk while dealing with cryptos. But this regulatory uncertainty is costing the Indian economy real opportunities. Consider cross-border trade, where Indian exporters often wait weeks for international payments to clear through traditional banking channels. Stablecoins could reduce this to minutes, cutting transaction costs from a 3 to 5% to under 1%. For India's $770 billion export economy, this represents potential savings of billions of dollars annually. Similarly, the $100 billion remittance market that keeps millions of Indian families afloat could benefit enormously from faster, cheaper digital currency transfers. India's fintech sector, already a global leader with companies like Paytm, PhonePe, could expand into entirely new markets with clear cryptocurrency regulations. Currently, Indian fintech companies cannot offer cryptocurrency-based services domestically, limiting their growth potential. Meanwhile, Singapore and Dubai are attracting Indian crypto entrepreneurs with clearer regulatory frameworks. The contrast becomes starker when examining India's digital payment success. UPI processes over 10 billion transactions monthly, proving India's readiness for digital financial innovation. Yet, this same innovative spirit remains constrained in the cryptocurrency space due to regulatory uncertainty. While the cryptocurrency regulation bill has not been passed, industry leaders expect it to emerge in 2025. India's approach has focused on cautious regulation while developing its own digital currency solutions. The question isn't whether India should copy America's approach, but whether it can afford to remain on the sidelines while other major economies in the world define the rules for digital finance. Digital currencies represent more than just new forms of money. They represent new forms of economic sovereignty. Countries that master digital currency and currency regulations will likely have significant advantages in the increasingly digital global economy. India's decision makers face a critical choice: continue with cautious incrementalism or embrace bold regulatory innovation. The Genius Act shows that America has made its choice as far as cryptos are concerned. The question now is whether India will follow the suit or risk being left behind in the digital currency revolution that's reshaping global finance.